Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, December 23rd. Woohoo, it's Friday and it's a holiday weekend. So we have a 3-day weekend coming up, so you won't hear from me again till Tuesday, December 27th. So I hope you guys all have a safe and wonderful holiday weekend. And let's jump right into it. We do got a lot of economic news releases scheduled for today. So we'll start off with the personal income. Back in October, it was 0.4%. We figured November would be a slightly lower, about 0.2%. It came in at 0.1%. So personal income still up a little bit, but just not as high as they anticipated. Consumer spending it was at 0.1%. They thought it would go up in November. These are all going to be for November's reportings. And that would go up a little bit, and basically it's stagnant. So consumer spending really didn't improve for November. And then we got core PCE. This is basically the core means is if you take out the headline news for PCE, this is the personal consumption expenditure. This is the Fed's favorite gauge when it comes to inflation. And basically wiping out food and energy, which creates the volatility. It can obscure the numbers a little bit. So this is without any interference from food and energy. So we had a 0.1% back in October, and figure remained the same, and it stays the same. So right now, inflation is showing very slow growth right now, which is good news for us all at the moment. And then durable goods orders, we had 0.0%, basically zero when it came in October. Figured to jump up about 3.6 and slightly above. So we're basically, most of these things are coming in about where numbers should be. And new home sales. So, and then we had 310 back in October. We figured it'd come up to about 315, and it did. So, good news. Improvement in durable goods orders and new home sales. Inflation's low, and people are still spending, making a little bit more, but not as much as they'd like. But they're still doing it. So let's jump over to headline news. So with those economic news releases. Stock market's up, but also Congress approved the tax cut extension, so they're feeling a little bit better going into this long weekend. So the market's up. So we'll see how this is affecting the bond market and what it's doing to interest rates. And it's basically going the opposite direction. So money's coming out of the bond market. It's going into the stock market. So that's why stock market's up. Right now, the bond market's down. We're now below the 102 level. And we'll see if we can hopefully we'll close above where the floor is, because obviously if we close below this floor, now that's going to become a ceiling. And obviously we would like to keep that up there. But rates are worse today, so I expect to see higher rates versus what we've been seeing the last, probably about, as we can see, the rates are probably about what we were about 2 weeks ago here. So, but anyways, the rates are obviously still good, but they're worse what we've been experiencing this past week. All right, folks, have a safe and wonderful Christmas weekend, and I'll see you guys on Tuesday. If you guys are on my site, please subscribe, get your free updates, and also today we're giving out the free gift, so please accept my free gift to you guys. Thank you for your support, and see you on Tuesday.